discussing SoFi recent performance, analyst ratings, short interest, options activity, and expert insights for informed decision-making. Welcome to Stock Analysis, your go-to destination for insightful market analysis and investment strategies. If you're ready to navigate the world of stocks with confidence, don't forget to hit that subscribe button. Today, I want to talk to you about SoFi. I want to discuss some current data points, understand what impact it's having on SoFi today, and make sure you're up to date on everything about it. Let's get straight to the point. As of now, SoFi is up by 3.94%, with a significant volume. 52.6 million shares have been traded, whereas the average is 44 million. So a lot of money has flowed into SoFi, even in a big market. It's true after Friday S&P hit a record high. There was a rollover optimism. After that, some things came to light. So I want to help you understand all of this thoroughly, starting with the analysts. The interesting thing is that I saw someone on Twitter saying, "I can't wait for a new analyst rating, and it will be bearish." I think he was obviously sarcastic, because history shows that whenever SoFi rallies, something negative always comes up. The truth is that these things came up 30 days ago, but they have been refreshed today. It's possible that they came out after Friday after hours. But it seems that Compass Point has given a $4 price target and has increased the speed. Ironically, it always happens this way. Giuliano also has a 58% success rating. I remember Compass Point gave a $3 price target before, but whatever happens, this time it's $4. So guess, perhaps a shout-out goes to the individual who said that. I saw they deleted their post. I tried to search for this again, but whoever posted it gets a shout-out because I think it was quite humorous. There hasn't been any specific news from SoFi, but Data-Driven Investing posted a good analyst summary on Seeking Alpha, indicating that SoFi will focus on revenue and earnings per share in Q4 2023 and fiscal year 2024. I touched on some points and also used some of their past tweets, which were obviously material. Today I noticed that shorts were quite skeptical about the rally. As you can see, shorts have increased by 414.96 thousand shares, which is 13.8% of the free float, meaning a total of 123.46 million shares have been shorted. It's also observed that the average cost of borrow is 0.86%. Despite the rally and FOMO, shorts were doubtful from the beginning. The teal line shows what shorts have been up to. As soon as the market opened, they were comfortably increasing their short positions. Approximately 2 million shares were added initially, and then they extended it to 3. There has been some reduction since then, but overall, it's quite a complicated situation. I'm not sure whether these things are orchestrated from behind or not. I want to talk about this video into the end. It discusses the need for more fear in the market and a slight pullback before a big rally. It suggests that there should be more fear in the market and a small pullback before a significant rally. I understand that it has hinted mostly towards the Santa rally expected in December. After that, the anticipated pullback, which isn't as substantial as idealized. However, looking at it from a technical perspective, as I mentioned earlier, it is still below that pivot point. The pivot point here is $8.28. Today it briefly touched that point, and the high for today is $8.33. It has made several brief excursions into this range. But overall, there wasn't much substance to drive the market higher. It was more about optimism. Technically, as discussed earlier, things are still aligning. $8.28 remains a strong pivot point that we need to watch in the coming days. Now, let's talk about options. $11 million in calls were bought, while 4.14 million in puts were purchased. Looking at all the options collectively, it seems a bit 50-50. Currently, 50% of investors are bearish. It's intriguing that despite this significant rally, people are not placing full confidence in it. So, often, when things are at their extremes, or when you feel they are at their extremes, you can always sell covered calls, and then you can always sell puts, almost near the bottom. Recently, I have sold some puts for the upcoming Friday at a $7 strike price, and then for the next Friday at $6, just in case there is a decision to sell at that point. And as I had mentioned before, I either like to collect premiums or buy at that same price if it has gone below that strike price. Some people have asked me which strike prices I use, because I use weekly options with SoFi, so that's what I'm doing these days. Besides, in terms of call options being purchased, the expectation is that it will be above $8.50, and looking at puts, the expectation is that it will be below 7.50. There are some very strong support and resistance points worth noting. So it's at 777, which is between S2 and S1. So 7.94 is a very strong resistance. And besides that, 7.15 will be the next support. So it's quite a significant gap. Therefore, wait for a lot of volatility, especially around their upcoming quarterly results. As I mentioned, Canaccord Genuity Chief Market Strategist Tony Dwyer spoke today. I understand that Sarah has done an excellent job of summarizing the expectations regarding the Fed policy and inflation. A call has been reinforced. You know, the Russell 2000, which is up about 2% today, had dropped 7% from its peak, while the S&P is at a new high. So the expansion we witnessed at the beginning of the year, I'm thinking that was an opposite day where the stage was set for a rally that continued until the end of October. You were historically overbought. The hopes for the Fed had reached that point where I thought they would be, and it was a busy end to the year. Currently, there is so much confusion about the Federal Reserve policy, and as Sarah suggested, it will be data-driven. We have a lot of data in front of us this week. We have GDP numbers and PCE coming in. This is what they are using as a benchmark, whether they cut rates sooner or later, based on the Federal Reserve. But what they have mentioned, secondly, you need to make a call. I understand that you may feel hesitant to make a bold call in any direction. Look, in the next 6 to 12 months, we have conducted a study that shows when the 50-day moving average of the stocks in the S&P components reaches up to 90% within a 10-day period, it is appropriate every time after 9 to 12 months. So this is the call. The question is, where do you start owning these stocks more aggressively? And here is a slightly risky time, where we have seen this run up in the S&P 500. We are a bit challenging in this intermediate-term consolidation and other things in this no-man land. And what we need to see, perhaps a little more fear in the market, so that we can attack for the real 9 to 12 months gain call. So, as it appears to be, it seems like he is waiting for some pullback, perhaps to strengthen the technicals. And then during the next 9 to 12 months, things will likely start picking up rapidly. This is the point he has emphasized. It's a very interesting perspective. I just wanted to mention this because various people have echoed this sentiment, perhaps using different words or expressions. There are a few other things to mention. The momentum indicates an increase in the number of retail investors today. So the volume you are looking at the same time, retail and large investors are buying, and if we look at the stochastic, it's a date. This means it's still oversold. And in this deviation, where the black line is above the red, it shows a bullish sentiment in the background. All these transactions are those that have occurred in the secondary market for over $100,000. So we can see that today, even large investors are getting involved in this. Thanks for joining Stock Analysis. Stay informed with our market insights. Hit subscribe for expert strategies, and let's navigate the stock world together. Happy investing.